I'm gonna let you introduce yourself, kind of introduce what you do. Tonight we're gonna talk a little about credit, what you guys do, and obviously I think people know the importance of it, but you can shed light on a lot of stuff that people may not be able to, may not know, tips to kind of help them out. So yeah, you go ahead, introduce yourself, introduce the company, and we'll start there.
Okay, well, my name is Willie Adolph. I'm with FBS. I have a team called the Adolph Group, and basically what we do, we're here to help others, educate them about their credit. A lot of people feel that cash is king, but credit actually can take you a whole lot further because you can use leverage with credit. So a lot of people have a misconception about credit. Everybody's saying 7 years it'll fall off. Well, that's a myth. Stuff don't fall off.
So go ahead and actually, definitely talk a little bit more about that, because I've heard that for years. Oh, it's 7 years, 7 years, 7 years, and a lot of people, it'll keep them from buying a house because they just, without contacting a professional like yourself to really know that, hey, there's ways. That 7 year thing is a myth. So yeah, talk a little bit more about how that really works, and how people can understand that, because I've heard it for years too.
Right. Well, before I got into this, let's put it like this. I've been doing introducing credit since 2003. So okay. I've been messing around with the credit stuff for a long time because I started with the mortgage side. So when I started with the mortgages, I had to kind of understand credit to help the clients that I had. And then as I continue my career, I started learning more into credit. When I dove deep into just learning about credit, it was around 2006, 2007 when that crash was coming. Right. And so once it crashed, it kind of gave me more of an insight because it affected my family personally with repossessions, foreclosures, things like that was on my credit. So 7 years, a lot of people say, well, within 7 years, it falls off. Basically, it's obsolete. You have a statute of limitation that it's on. Right. But the problem is with a lot of people think that, so it's just like, I'm going to tell a company, hey, I'm reporting this person late. Right. I'm reporting it to the credit bureau. The person at the credit bureau is not going to sit there and say in 7 years, hey, guess what? We need to go ahead and take that off. Yeah. Technically, it has to be requested off. Yeah. Because it can stay on your credit report for life. Okay. It just doesn't fall off. It's just like, home purchasing. When they have the PMI, it's supposed to fall off after you get 20%.
You read my mind, because that's where I was going. That's exactly what I was going to say. Go ahead. I'll let you finish. Yeah. So technically, the mortgage company going to try to ride it as long as they can. But once you realize, hey, I got 20% equity in my home, you have to contact the mortgage company and request it off. So there's a lot of things. And with credit, a lot of people here, it's a law that was passed that anything negative on your credit report, you are allowed to investigate. Right. So when a lot of people fail to understand that with credit repair, it's not saying it's not your debt, but what it is saying that what's on there has to be accurate. It has to be verifiable, and it can't be too old. So out of those three things, if it's one of those three, it has to be deleted. A lot of people don't know that if they're off by $100, $5, it has to be deleted because it's called inaccurate information. Okay. So even for like repossessions, you may, a lot of people fall on hard times. Yeah. And with the repossession, you could have put a lot of money down and the car may still have a little value. But say, for instance, you owe $5,000 and they take the car back or you give it back. Voluntary repossession is still repossession. And majority of the time, if they repossess the car, what they're going to try to do to it if it's still in good condition? They're going to try to sell it. Absolutely. Yeah. So when you turned it in, it was $5,000. But what if they sold it for $4,000? Do you still owe the $5,000?
No. Now you only owe 1,000. So they're supposed to contact you and let you know that, hey, your car was sold, and you're supposed to, there's the difference of what it is. It's the bill of sale. And a lot of people don't understand the leverage that credit has. Nowadays, rental history, before they pull your background, they looking at your credit.
Yeah, it's crazy because, honestly, and you can speak on this because it affects almost everything right now. So while I am a huge fan of Dave Ramsey, some of this stuff, and I like a lot of Dave Ramsey stuff, but as far as just not having any credit, honestly, it affects job situations. Employers check credit now. Maybe not all of them, but I know a lot of them will check credit. Insurance, it's virtually, I don't say everything, but it's close. It's real close. So, but yeah, you could go ahead and kind of expand on that a little bit more. But yeah, it's crazy the effect of it.
Yeah, because credit has so much to do with your down payment. Credit has so much to do with your interest rate.
Yep.
You have some insurance companies, they say, well, it doesn't matter with your credit. They do what they call a soft pull.
Right. Yeah.
And when they do a soft pull, they're looking at your credit history. And basically your credit history is like your report card telling you what you've been doing within the past few years of your financial life. So it kind of dictates a lot of things.
Yeah, explain that soft pull versus a hard, so people understand the difference. Because I know, people may not understand the difference between them. So explain that a little bit about the soft pull versus a hard inquiry.
Okay, well, soft pull is when a company, say for instance, sometimes like a light company, they can do, it's like a snapshot of your credit.
Right.
And what they do is they look at it and they kind of judge and see if you have anything that's basically, do you owe them?
Yeah.
When you do a hard pull, they're contacting the bureaus.
Right.
And they're getting all the information from all three bureaus, or depending on if you're pulling a car, they only pull from certain bureaus. But when you're doing a home, they pull from all three bureaus. Yeah. So that's what you consider a hard pull. And hard pulls does affect your credit.
Got it. Yeah. Yeah. So that's another differentiating factor too, because a lot of people think, and I definitely want you to talk about this. So many resources out there for people to go get their credit, get their own. And so what I get a lot is people will tell me, they'll call me and they looking at buying a house, and they'll say, hey, well, I pulled my credit, 3 months ago, I had 780. And I'm like, okay, well, listen, and I want you to talk about this, because the difference between like Credit Karma or all these other resources that people have versus them getting a mortgage. And I know a mortgage, when you're getting a mortgage credit, pull for a mortgage, it's the most thorough report you're going to get, even more so than a car or really anything, in my opinion. So, talk a little bit about that, like the hard, kind of the differences there.
What we've noticed over the past years, Credit Karma, they give you more of a snapshot of what your credit is. Right. They give you, free credit analysis.
Yes.
But what I've seen in the past is that the numbers are off because they don't actually pull directly from the credit bureaus updated file. So perfect example, I have a client right now that she called me and she was like, hey, I just need to get my scores up to a 680. I just checked on Credit Karma. I'm at a 622.
Right.
So we was like, okay, let's do it. We're going to have to go through the process of, eliminating this, that, and see what we can do. When I said, well, matter of fact, go talk to my friend that works at the mortgage company. Let's see where we stand.
Yeah.
So we can actually do a real hard pull. Yeah. And come to find out, she was at a, mid fives.
Yeah. Yeah. I see it all the time.
So that's a big difference. If you're at a 622 and you're now at the mid fives, that's like 60 something points. And, 1 point can actually kill any kind of deal, and depending on what company you're going through. Yeah. So when you go with Credit Karma, it kind of gives you a snapshot. They offer a lot of stuff to you to try to be more aware of your credit. Yeah. But to be accurate about your credit, you have to be more mindful of what's going on. When you co-sign for somebody, you know, if they mess up, it falls on you too. Yeah. You know, so a lot of people think that, well, that's not mine. Yeah. Well, no, it is. I'm sorry to say, and you can't just call them and say, look, take my name off. Yeah. No, because you're the reason why they got it.
Right, right. Yeah. Yeah, that's a misconception too. A lot of people are like, oh, well, I just co-sign. I mean, co-signing, you might as well be the top signer because it really doesn't matter the order of the names. It counts the same. So, yes, you know, that co-signing, I mean, I've seen people just completely get their credit ruined by it, by co-signing for somebody. So, right. People, you know, not to, when they're looking to own a home, because especially I see that all the time too. With somebody's co-sign, it's like, and maybe that one debt is really keeping them from qualifying.
Yes.
And so, you know, they got to go look at maybe trying to refinance. The only way to really do it is to refinance it. There's no other way. Like you said, you can't just take my name off of it. So, but yeah, that's definitely I see that all the time. So, you and I like when I talk to people about credit, I like to use the word credit restoration. For some reason, credit repair has a negative connotation. I don't know why, but for real estate, the bottom line is we need to, you know, we need to move from here to here. Right. I call it. So for you guys, what I know there's not a one size fits all because everybody's situation is different. But if you're working with somebody, do you guys give them I guess is it just in their situation to say, okay, based on what I see here, I think it's going to take 2 months, 3 months, or how do you guys kind of break that down when people come to you for with that?
Well, technically, what it is everybody, like you said, is a case by case scenario. Right. Yep. Nobody can guarantee you anything. Right. Yeah. Basically, everything is computer generated, but it's calculated as well. So when we're looking at the credit, the good thing about what we have to offer to the clients is that we have a similar what if scenario. Yeah. Yeah. So what happens is with a what if scenario, what if I pay this down, this down, this down, or pay this off, this off, this off? It gives you a calculation. If you do this, you have an opportunity to get this score from where you're at now. Now, is it 100% on point? No. Right. But it gives you a snapshot of, hey, if you do this, you will be in that ballpark figure. But you know, it's hard for me to eyeball it and say, But what I do know, if you're late, you hurt yourself. Yeah. A lot of people also don't know. So say, for instance, March has 31 days in there, right? And you have a payment due on the 1st of March. Uh-huh. And some people say, oh, man, I made the payment on the 15th. I'm late. Okay, you're late with the company, right? But you're not late with the credit. Right, right. Because you have to be a certain amount of days, which is 30. Now, some people will say, okay, well, I'm going to make my payment at the end of March, which is the 31st. Guess what? You are late now. Even though you paid in March, it's a perception. Oh, well, I still paid in March. But you paid on the 31st. That's past 30 days. So you have to realize 30 days is 30 days. February has 28 days. So you really technically anything after the 2nd of March, now you're late unless you get that leap year. So there's a whole lot of things and a whole lot of variables that a lot of people don't think. They look at, well, I paid in March, it's March. No, it's the days. But then you also have to look at your calculations. You have to realize you have to probably even call your company and ask, when do they report to the credit bureaus? Right. Because your credit cards are not all reporting at the same time. And now the way to build your credit is to keep your maximum balance up under 30%.
Yeah.
So you can charge whatever, but you have to realize once you charge over 30%, regardless if you're making that payment on time, you're going to get hit because you're overextending yourself. You're spending what they say, you're living on other people's money, and and you kind of get dinged for that at the beginning.
Yeah. No, and that's the rule I give everybody. I always say 30%. I'm not real sure. I've been in the game for a while, so probably sometime long ago somebody mentioned that to me. So I was going to ask you about that, because that's kind of the advice I give people when they're looking at, because that's probably and I want you to talk about like the weight that these girls put on a mortgage versus credit card versus, and maybe not necessarily specific percentages, but I know there's different weight for different things, installment loans and mortgage and so forth.
Right. Well, your biggest weight is your payments.
Right.
That's 30% of how everything is graded on your credit. So a lot of people look at it the wrong way for the simple fact is that they feel that, okay, if I make my payments on time, my scores are going to boost up tremendously.
Right.
But what they fail to understand, your scores are going to go up as long as you keep that balance low, and they're going to go up. But the problem is, I look at it like it's almost like somebody's reputation. Yeah. And you look at it like this: it doesn't matter all the good that you've done. Right. It's that one thing, that one thing that you did wrong. Right. People will spread that so fast, and your credit's the same way. You make that one late payment, guess what? Your scores can drop anywhere from 20 to 70 points off of one late payment.
Now, does it matter whether it's a credit card, a car? Obviously, I know a mortgage payment, you probably take the biggest hit if you ever had like a late
mortgage. Yeah, mortgage and cars take the biggest hit, but also the credit cards take a big hit as well. It really the mortgage I think the biggest hit for the simple fact, if you try to purchase another home, the first thing another mortgage company is looking at is your mortgage history, rental history, whatever history is where you live. And what they look at is that I have a client right now is that we're disputing their late pay. Right. So you can actually get that negative off of there, because at the same time they have to verify how were you late, the days. And the thing is that it's going through the credit bureaus that fight these for you. Right. A lot of people think that you go straight to the creditor. Yeah. Sometimes you can work a deal out with them, but a lot of times you're going to lose that battle because they're in it for the money. They're not in it for the people. They're in it for that bottom line.
Yeah. No, that makes sense, man. When people are looking at getting a mortgage, there's a lot of stuff that people do or they don't know. For me, I found that it's usually when they're looking at buying a house is when a lot of stuff comes up that they just didn't know. Right. For, if you're buying a car, you're trying to get a credit card, it never really comes. There's a lot of stuff you can get away with just buying a car. I mean, because the car, they can go repossess, or they can, it's just different. But when you're looking at getting a mortgage, for example, it's just, I felt like all the stuff you didn't know about your credit past starts to come up. It never fails.
Exactly.
Looking at getting mortgage. So
you're like, I forgot about that.
Oh, it happens all the time. Yeah, all the time. I'm like, well,
James, to give you a little better percentage, you got the way that your credit is calculated: 35% of your payment history, 30% of your amount used, 15% of the length of your credit. 10% is your new credit, and 10% is the type of credit that is used.
Okay, I'm gonna move this real quick. Go ahead. Keep going.
Yeah. So basically, it's all of that is calculated into what your scores are as of today.
Yeah.
And you know, and it's funny that you have different. Now, every vendor is supposed to pull from the credit bureaus,
right?
But all of them don't.
Yeah, it's frustrating too because all the bureaus, and we can speak on this a little bit too, because you got Equifax, TransUnion, and Experian. They don't all necessarily treat everything the same, which is frustrating for me because they all do stuff different, and so that's why you have 3 scores. But maybe you talk a little bit about why that is. I don't know if you have to know what the why is or why they do that. I don't know if it's, you know, because when you get in a mortgage, of course, they look at all 3 scores and then they take the middle.
Right.
That's just, I guess it's just like, that's the fair way to do it because they all have different models for scoring.
Correct.
So
well, the way that the model work, I didn't mean to cut you off. The calculations are the same, right? But it's the reporting. Everybody doesn't report to those bureaus the same.
Okay.
So if I may report to TransUnion, but not report to Equifax.
And so they're not required to report to all 3.
No. And see, a lot of people think that the government is that the bureaus are a governmental rule. Right. They're not. That's a myth.
Right.
So they don't have to. They're not governed, you know, by the government. These are independent. This is an independent source.
It's just independent.
So they're making billions of dollars.
Yeah.
They're not They're not regulated by the government.
Wow.
So you know, it's crazy that, you know, they have those 3 numbers have so much power over what you know, what you can do with your life, what you can do with purchasing and things like that. And a lot of people just, you know, really don't understand the power of credit. And that's why when you work with me or our company, we not just only give you the opportunity to restore your credit, we educate you on your credit. You get your own private portal to where you have a snapshot of what's going on with your credit at all times. So you can wake up at 2 o'clock in the morning and say, hey, what's going on? We have what they call a progress report, you know. But a lot of people, we live in a microwave society. And what I mean by that, we put it in the microwave, we hit popcorn button, and guess what happens? It's done.
Yeah.
We're not old school where you have to warm up the oil, put the popcorn in, shake it around, and take its time. You know, we want everything. Hey, well, I paid this, it should go up. No, it takes time. Negative stuff does spread faster than positive things.
I'm glad you said that, because I was about to say it's funny because when you screw up, it's quick. Trying to fix it. Now, if the creditor makes the mistake though, it's like pulling teeth trying to get them to fix it. Now, eventually, you know, if they on it, you'll get it fixed. But a lot of people just don't have the patience to deal with it. And so that's where you can come in and help people that are in that situation. But yeah, when you screw up, it's like, bam, they hit you hard real quick. But trying to fix a mistake from a creditor, it's just the opposite. You know, it's not a microwave fix when it comes to them screwing up. But when you do it, it is the microwave.
It's like, bam, we got you. We got you. So, and a lot of people.
I tell people, like, you know, it is what it is. Like, these are the rules. This is the sandbox we're in. It's their rules. I mean, if you want to play in their sandbox, this is what you got to do.
Yeah.
I mean, it's simple. Like, if you want to try and go through life without credit at all, I mean, I guess you can. That's what Dave Ramsey advocates, but you know, it makes it challenging in a lot of situations. You know, when you're trying to look, like I said, even just from applying for a job or getting mortgage insurance, maybe mortgage insurance, you know, renter's insurance for that matter. I mean, literally everything kind of gets checked. Even if it's a soft pull, it's still having an effect because they can say no.
Yeah, even for cell phones. You get turned out for okay, so here's another thing. A lot of people, you know, when you look at credit, okay, you have to have credit to get into this apartment. to get into this house, whatever which ones. Guess what? You have to have lights. What do? They pull credit. Not saying they're going to deny you, but guess what? You may have to pay a deposit.
Exactly. Yeah.
You may have to, you know, when you do your gas, when you do cable, internet, anything that you do nowadays, they pull credit. And, you know, I've always thought different. It's like, okay, well, if I got bad credit, why are you making my payments so harder? If I'm struggling now with these payments, how are you going to give me a higher? But that's, you know, that's something that it's like one of them lessons you have to learn. You know, if you want good things, you have to treat things good. And with us, we involve our clients with every step of the way. We make sure that they're involved in it. A lot of people say, well, you know, why do you do that? Well, if you put skin into the game, you're going to be more involved with it. You're going to make sure that I'm not messing it up. I'm not going to let nobody mess it up, and things like that. And we're here to educate. It's not we're going to fix it. No, we're going to educate you during the whole process. So it's not fixing anything. It's restoring it and making sure. Can you do this yourself? You can. You definitely can. But it's just like when you go to court, you don't have to have a lawyer. You can represent yourself. But there's a little, you know, there's some ins and outs that you may not know.
That's right.
I always say, can you change your own oil? Sure you can. But do you really want to go through that hassle?
Yeah, I mean, do you want to? Same thing for us. Like, I mean, I'm a realtor. I mean, you can sell your home on your own.
Right.
But a lot of times, the same thing. Like, there's so much stuff that goes into it that you may not know when it comes to contracts and stuff that comes along with title. And so, I mean, you're rolling the dice. But, could you do it? Yeah, you could. But why not pay an expert, have an expert that knows exactly what they're doing? They're going to save you a whole lot of time. And, you know, in the case of real estate, you know, most of the time, having an agent, people will actually get more money when they, you know, versus them selling for sale by owner. But I know a lot of people think it's flipped. There might be a case-by-case situation where that's not true. But for the most part, I said, get an expert. Like, you can figure out anything you want. Just go to YouTube. Everything's on YouTube. People don't need to go to YouTube. But, you know, I mean, people got a lot of stuff going on. And the credit thing for me, I'm like, man, you need to get an expert. Because it's not something like you say, it's not a microwave. Like, you know what you're doing. And yes, people can figure it out, but man, it's consistency and staying on top of these bureaus before you see change. And most people, in my experience, they don't have the patience to do that. And so you guys what you do for people, it's great. And
I appreciate that. Yeah. And, you know, and for what you guys do, a lot of people say, well, all you're doing is opening a house and showing a house. But it's a lot more, you know, but it's a whole lot more behind that. You know, you guys have to take on the liability of making sure that, perfect example, if a house is flooded and somebody comes in there and paint the house and cover everything up, you know, it's your fiduciary to make sure that that client is taken care of, that they're not stepping into a mold trap or something into, you know, things that's going to hurt them later down the line. So you guys do a great job of helping out the clients as well. So, you know, it's a hand-in-hand thing that what we do. A lot of people say we don't work fast enough. Well, here's the thing. It's not that we don't work fast enough. You just destroyed your credit faster than we can repair it. So, you know, paying your bills, taking care of it, being, you know, responsible. Don't get me wrong. Life happens.
Yeah, absolutely.
Things happen in life that there's uncontrollable things that, you know, I've been there. You know, I've had repossessions, I've had foreclosures, but at the same time, you know, with credit restoration, there have been mistakes reported incorrectly that was able to be deleted and removed off of my credit report. And that's our thing, is that we're here to help. Are we going to sit here and say it's going to be fixed right away? No, we can't promise that first round that we do is going to be taken care of. You know, I'm never going to, I set expectations. You're going to take 3 months. You're going to see some improvement.
Right.
6 months is where you're going to see great improvement. But then at the same time, your improvement and my improvement is totally different. You know, you have people out there that says, "Oh, in 30 days, your score is going to go up." Guess what? They're not lying. If your score, if you had a 500 and you go to 501,
yeah, exactly. That's right. It went up.
It went up.
Funny. I just heard the first of the day, and it said, "Guaranteed, we're going to get you to." I think it was like 720, and I'm just laughing. Like, how are you making this guarantee? Because everybody, there is no one person, and I don't do credit restoration, but I've been around long enough to know everybody. There is no one situation that repeats itself exactly the same way. Correct. As long as you've probably been doing this, there's probably been nobody that's like exactly the same.
No, you might have some similarities, but there's nothing the same. And you know, when people say we can raise your scores guaranteed, the problem with that is, I'm gonna tell you, my guarantee is satisfaction guaranteed. If you work the system will work for you. Yeah. I'm not gonna guarantee, because here's another thing that I've run across my years, even as of last month, I still run through this thing where people say it doesn't work. You know why it doesn't work? Because you don't allow it to work. And what I mean by that, if we do remove some negativity, your scores will go up a little bit. So, perfect example. I have a client, we remove 6 items. Yep. Scores went up 52 points. Great job. They miss paying a bill and their scores dropped 65 points. So then they down to what? So that's 13 points under from where we started. Yeah. And they was like, say, well, they did. Hey, you said my scores don't go. It did go up, but when you didn't make this payment, you got to stay with it. Well, you understand? No, I don't understand. Yeah. You know that this is this is that. So but I do understand times do come where we have to pick and choose of what was going to happen. But once it goes, here's another thing. A lot of people don't know that if you have a collection, I will use a cable company, and they're coming after their debt. Of course, they sold it to a collection company, and now they're trying to fight. You can't have 2 people coming after the same debt. Right. That's against the law. So some people don't know that. So we have to remove that. We also clean up your history of where you live, of addresses, because sometimes there's a typo. Because you may have 6502, but then on your credit report it says 6520. Yeah. You know, a bank is going to say, well, you know, why is this like that? But this is where we can remove things like that. Phone numbers, employment history, misspell of your name, nicknames. A lot of times that we do come across, like for instance, my dad is a senior, I'm a junior. Yeah. So when you say Willie Adolph, it can have all my dad's information on there. Yeah. And, you know, it may not be good that I need that because it's not accurate information. You know, and vice versa. You know, there might be some bills that I didn't take care of, and my dad be like, say, you need to get this taken care of. Well, you know, so we are very diligent on making sure that, you know, when somebody looks at your report, it's really a reflection of what you've done. It's not a reflection of who you are, but it's a reflection of what you've done. So a lot, you know, so we try to make sure that when creditors and vendors look at your credit report, we try to make sure that it is clean as it possible. We want to make sure that all the I's are dotted and the T's are crossed. Do we get everything off? No. Why? Because some stuff is reported correctly, is reported accurately, and it's still within that time frame of statute of limitation where it has to be on there. So we're not here to say we're gonna get everything off, because nobody can just get everything off. And you got to be careful of who you let put stuff on your credit, because it's technically illegal to do that, and it's credit fraud. So there are things that you can add to it. We have what we say credit rent. So basically what credit rent is, this is good for people who have lack of trade lines, and they need some more to help boost their scores. But how many times have you pulled somebody or seen somebody's credit and their rental history is on there? You don't see that.
No.
But guess what? Miss that payment.
Yeah.
It'll be on there. But we offer programs that's legal that you can actually go back 2 years and put that positive trade line on there, and that helps with their scores. That helps with their rental history.
Right.
We also offer secure credit cards, because here's the funny thing. You go to a bank and tell them, I want a secure credit card. That means I want to give you my money to open up a line of credit.
Yeah.
Guess what the first thing they do? Pull your credit.
Yeah. Like, I'm giving you my money.
and then guess what happens? I don't like what your credit look like. You're denied. You're denying me for me to give you my money to put on this card to spend. And yes, they will. We offer services to that. Now, the thing is that now once you put your money on there, how are you going to treat that card? Right. This is what the credit bureaus now look at. Even though it's your money, if you give the credit card $300, that doesn't mean you have $300 to spend. That means you're showing the three bureaus, hey, let me show you how I can manage this money. Because after X amount of time, you can graduate, and then it goes to unsecure.
Right.
And then that means now you're trusted with somebody else's money.
It's almost like having a debit card, but you get to use it to build up your score. It actually, obviously, a debit transaction, credit report, but yeah, essentially, it's a debit card that gets reported to the credit bureaus. In essence, is what it is.
Right.
Yeah, and it's important for a lot of people because, especially people that don't have any credit, or just people that may have just had some stuff come up in the past where it's just, they had a bad situation that's kind of, and like I said, everybody's probably had it at some point. I know I've dealt with it before, but that's secure credit card. I did not know that. That's actually a nugget, because I didn't know that you could get denied for a secured credit card. I didn't even know that. I ran across that many and many times, and it still baffles me that how can you get denied? Yeah.
There's several banks out there. I'm not mentioning them, but there are several banks out there that will deny you. So you kind of just got to make sure. Another thing that we offer with our service is, on top of the education, on top of showing you how you can do debt zero, clear your debt, how you can pay your debt, how you can pay your house off, or how you can pay your car off, how you can pay your credit card off. We have so many tools. We have credit protection. We offer LifeLock, part of our program. So that means, because every 2 seconds, somebody's identity is getting stolen. Somebody's identity just got stolen.
That's crazy.
So guess what? Now you're getting alerts of what's going on. We offer credit monitoring. All of this is part of it. So we say, for instance, now we're going into the tough times of, we have stuff that we can prove that is inaccurate or unverifiable, but the creditor is being real stubborn about it. Part of the service is we have credit attorneys on staff to help fight that. So another thing, you get those phone calls on your job, at home, our credit attorneys take care of that as well, to stop the harassing calls, for the simple fact is that, we get that taken care of for you, because you're not allowed to be harassed.
Right. That's awesome, man. That is lots to go, man. Well, listen, tell people, first of all, how they can get in touch with you guys, whether it be website, social media, whatever it is. Let people know how they can reach out to you guys. If they've just got questions about anything we just talked about, or anything else that they want to maybe address to you personally, I can get a hold of you.
Well, to get a hold of me, you can always call me or text me at 281-451-7087.
Okay.
If you want to email me, if you want to go to my website and just check out everything that we offer and what we have, you can go to www.myfes.net/ Adolph. And that's Adolph. And on there, it has so many opportunities.
Yeah, I'll add that to the. I'll add that on here so people can easily just click there and access it. And you are. So let me ask you one last question. So I know you're based in Houston. Doesn't really matter where people are, right?
No, I'm actually bonded. I'm bonded under the company. I'm bonded and licensed in all 50 states.
Awesome. That's great.
And so everybody call for Will, because if you have Will, you have a way. I am Will.
I love it, man. Well, I appreciate your time. Listen, we will do this again, because this is one of those things that you can't just touch one. I mean, this is something, obviously, for what I do, and I know your wife, obviously, and she's a realtor as well, all of us, this is something we will definitely, I will have you on again, and we'll talk some more about this, but I appreciate your time, man.
Hey, and I appreciate you. And hey, and think about this for all the realtors out there.
Yeah.
If this is something that you're interested in, how can you learn about it? Reach out to me, because you can do the same thing. You can help your pipeline out, help grow, add value to your service, anywhere. Yeah. So because if, instead of sending somewhere off to someone, you can give them the same information. Just, reach me, 281-451-7087.
Sounds good, man. Well, I will get that out. Like I said, I'll post that website as well. And again, man, I appreciate your time. And yeah, you guys, if y'all have questions, give Willie a call or reach out to him on his website. And we will have you on again, brother. I appreciate your time.
Hey, I appreciate you having me on. I really appreciate it. Thank you very much.
Willie. All right, man. You take care. Have a good evening.
All right, you too. Thanks.